Good evening, everybody. Today's my discussion is about auditing. It is first year BCom students subject. Whichever you are studying, whichever in university you are studying, it will be useful for you. So it is light or brief introduction about auditing. I just want to summarize this topic, okay, so that you will be having a clear clarification before you are going to take this subject. So why we need auditing in any companies? Okay, so before knowing the importance of the auditing, we must know what it actually means. Okay, auditing means, even if we want to define, it is the process of examining and verifying the financial statements of an organization to ensure that they show a true and fair view of its financial position. It means here the company. We all know the definition of the company. You can check my previous videos. Okay, so it will reveal the clear position, financial position of the company. So that is the reason, before if you want to invest in any company, you have to thoroughly check about their financial records, right? So even if you want to search in Google, they will be providing their audited financial statements, right? Then only you can decide that you, if you want to invest in this company or not, right? So before to that, who are confirming that those financial reports? Any auditor. Okay, so any auditor appointed by that company will be approving that those companies financial statements are the proof of their prosperity, and that the company is running in a profitable basis, and that you can invest. Okay, and those are true and fair. Okay, that is what they are going to give the conclusion after auditing. If not, they say that this quarter they face loss, or from the last 2 3 quarters they are facing losses, or from past 10 years they are facing losses. Whatever may be the situation, genuinely they will put into that report. So for that give conclusion also, they have some procedures that we will discuss in the on the same video. Okay, but before to that, we have to understand what it is exactly auditing. As I mentioned above, auditing is the process of examining and verifying the financial statements of any company or organization. It involves checking the accuracy of accounting records, ensuring compliance with accounting principles and laws. So if you have an organization, you cannot maintain records in whatever system you want, in whatever way you want. There are certain rules and regulations. If you have established any company, you have to follow the accounting records and as per the compliance with the government. Okay, so accounting principles and laws you should follow. So that will be that the, those act, such type of accuracy will be again audited by the government even. Okay, even for the Indian government it is must and should, because we are paying taxes. Whatever we are paying, that taxes will be utilized by the government for different reasons. Okay, it can be used for the donations in case of natural calamities, or it can be used for construction of infrastructure like flyovers, buildings, running of government organizations, or roads and transport, whatever it may be, right? But end of the year there will be a COG auditing on government even, in which way they are utilizing all those funds, right? In the same way, for organization also there will be an auditor. The company, they themselves can appoint any auditor, and that auditor will be scrutinizing their reports and giving any performance evaluation of that company. So what will be the performance here, whether the company is running towards profit basis or towards loss? Okay, that will be the conclusion. Or sometimes if they are doing any malpractices, that also will be found in those financial reports. Those will be discussed in deep in this video. Please pay attention. And then objectives of auditing we have to understood. Okay, so primary object will be to verify the accuracy of financial statements and express an independent opinion on them. So first and foremost thing is, auditor's work is to verify the accuracy of financial statements, and then they have to express their independent opinion. Okay, and that too in relates to that accounting rules and regulations. And secondary objectives: detection and prevention of errors and frauds. Okay, so if the company is into any fraud, or by mistake if they are doing any errors, so such thing will be prevented by evaluating those financial statements. So, and the another object of the objective, secondary objective, is ensuring proper accounting policies and internal controls are followed. As I already mentioned, that they also ensures that these accounting policies are getting followed by the internal controls. Okay, not only the auditor, but the staff who are working in that organization are also in compliance with the government rules and regulations as per the accounting policies. Okay, that will be the secondary objective of the auditing. Fine. And then we have to know how many types of audits were there in any organization. So if we know the company structure and how the hierarchy follows, then we will get to then we can clearly learn about this auditing even. Okay, so you can follow my previous video. I clearly mentioned the hierarchies even. Okay, here there are 6 types of auditings. One is the first one is statutory audit required by law, means company audit, if the company is incorporated with the government certification or not. So these types will be the first, in first case they will be scrutinizing such type of records. Simply if you put any name plate on your company or on your building, and then you cannot say that it is a registered company. So I already clearly mentioned in my previous videos. You can go through such videos for these type of information. So the such type of statutory audit they will be doing, not only about the incorporation of the company, but also statutory means any law which is implied by the government. Okay, not by the private people or any social laws here, exactly by any law which is implemented by the government, that is called statutory. Okay, so they have to check whether the company is following those rules or not. And then internal audit, this internal audit will be conducted by the internal staff itself to check internal controls. They themselves will appoint internal auditing team and they will control such type of accounts. And then cost audit examines cost records and cost accounts. We all know, if any company is incorporated, for which sake they will be incorporating, for doing some business, right? So such type of goods and materials or goods and services or machinery, whatever maybe the company is involved into, such cost records and such type of cost accounts, wages, income, profit, and even expenses, everything will be checked in this type of cost audit. And then management audit evaluates managerial efficiency. It is not about the monetary on the monetary basis, but it audits the management efficiency. Okay, and then tax audit reviews accounts for tax purposes. Okay, so tax purposes, we all know, we all pay GST. So nowadays GST is a burning topic. So apart from that, for company's sake, there will be a tax audit. Okay, so that they will be submitting such reports to get benefits of the GST. Even the companies will get return from the GST if they are eligible for that. And also they have to pay income tax, as we are paying professional tax. Being salaried people, we pay professional tax. Likewise, companies will be paying income tax based upon their profits. Okay, so for these things they can also get tax exemptions, and they can also get returns from the GST. Okay, for these sake they have to apply tax returns. Okay, for before applying for tax returns, they have to go through the tax audit every year. We all know the financial year ending will be March 31st every year. It is not like according to the calendar year, like Jan to December. Okay, it will be different, right? April to next year March. So likewise, they will be submitting tax returns before 31st every year, and those reports will be audited. And then government audit, so we all know this conducted by government auditors like CAG in India. This is government audit. Okay, so we all discussed about the types of audit. Now we will jump into principles of auditing. So what are the principles of auditing here? Independence and objectivity. So every company have their own auditor and they maintain their independent records, and they have their own auditing reports. Okay, and then integrity and confidentiality. So integrity here in the sense there will be no corruption, and they have to maintain the confidentiality for their benefit sake, otherwise it will be a big mess. Okay, so because it relates to financial matters, right? That is the reason they have to maintain confidentiality. And then due care and professional skepticism. So they have to be very professional while maintaining the records and even while submitting the records, and they have to take care of each and every document. They cannot misplace, and they cannot say that this is the only one thing we missed, or they cannot say this is the only error which occurred, otherwise we are too good. So these type of unprofessional things will not be entertained, and they cannot do any there should not be any miscommunication, and there should not be any non-abiding by the law. So they should be very professional. They cannot plead the auditors, or they cannot give some benefits to show wrong reports or wrong conclusions. So they should be very professionalism. They must show the professionalism while auditing. Okay, and even the auditors should not expect any benefits from the company. They have to give the genuine reports, because based upon their reports itself, the people are going to become shareholders in that company, right? So if they are giving wrong reports, wrong financial profit reports, then the people will feel like they are really into profits, and they will buy more stocks from that company. But end of the day, if they are into loss, what they can give, what they can pay in the form of dividends to the stake shareholders, right? That is the reason. Even if you are buying any mutual funds, even yourself or your parents or your uncles, your anybody, neighbors or your friends' parents who are not literally knowledgeable into mutual funds, you can make them understand that before buying mutual funds or before buying any shares in any company, you should go through that company's financial reports. Otherwise, it will be a big trouble for them. Okay, they cannot get good returns from the investment. Sometimes they might lose their principal amount, means whatever they invested into that company. So that is the reason the principles of auditing reveals that the auditor must be very genuine and very professional. And proper planning and documentations. They cannot start auditing reports, prepare reports in the month of March. So they, right from the day one, they have to maintain good systematic reports like bookkeeping, ledgers, and trial balance reports, and balance sheets, profit and loss account statements. Everything should be in black and white. They have to put it on the report. So then only they will be having some time to go thoroughly and give some proper conclusion about that company. If they themselves are taking much time, when they will file IT returns, and when they will get then when they will get audited, and when they will submit for the IT returns, right? So that will not be possible. So they have to have some proper planning, and in time they have to produce all the required documents. Otherwise, they have to pay penalties. The company will be penalized, or it looks unprofessional, or sometimes the company may lose some important shareholders even. So documentation should be very accurate, and even the planning before recording such type of statements also is very much required by the internal staff. They cannot sit until the last minute. Okay, and then we'll move on to the next topic, which is audit process. Next point in this same topic, audit process and or stages. So here, planning the audit, internal control evaluation, vouching and verification, valuation of assets and liabilities, final audit report. These are the main essential points in this audit processing. So planning the audit. So auditor must understand the business first. Simply he cannot audit on the basis of same accounting principles for each and every company, because each and every company's business is different. Some will be in manufacturing sector, some will be in IT sector, some will be in services sector like teaching. If it is a school, that will be a different auditing process. If it is a manufacturing unit, the records will be different. If it is a IT sector, the goods and services are different here, right? So they have to understand the nature of the business of the company. Okay, so auditor must understand that nature of the business, and then he should set audit scope for that company. And then internal control evaluation. So checking internal systems and controls. So they have to understand which software they are using, and which type of system they are even using. Not computer system here, means like a few will be opting their own methods of procedures, right? So they should tell them that they have to fall according to the accounting rules. So strictly all the internal staff should be following the same audit rules and regulations. And then vouching and verification. We all know vouchers, right? Nowadays all got computerized. So we actually not paying attention to the paperwork nowadays. But before, in 90s and 2000s also, people used to get some receipts. Okay, so and even vouchers. Okay, for if they are doing any payments, there will be vouchers. So they have to get the vouchers very clearly. For each and every transaction, there will be a document with a receipt number even. So voucher number we call it as. Okay, so those vouching and verification must be involved in the such transactions. And then valuation of assets and liabilities. Okay, so ensuring they are recorded at correct values. See, if you have a building and if you have a company and your company is having a building, so that costs only 2 crores, but if you mention in the balance sheet that asset cost as 200 crores, then your audit will not your auditor will not allow that. Okay, so you even 2.5 crores also you cannot mention. So as per the market value, you have to mention that asset cost. You cannot mislead or misguide the auditors, right? So that will be acknowledged by the auditor afterwards. So you have to mention the correct values. And then final audit report. So after valuation of the assets and liabilities, even liabilities also, if you have 2 crores loan with you, but if you are mentioning only 1 crore or 1.5 crores, you are hiding 0.5 crores over there as a loan, whichever you have, right? So it should not be entertained. It will not be entertained by the auditors. So you have to mention the correct values over there. And then final audit report, preparing and presenting the auditor's opinion. After evaluating your all documents, like as I mentioned, bookkeeping, even nowadays everything is systemized, but these are the accounting systems I'm mentioning here. So bookkeeping and even the ledger, trial balance and the balance sheet and profit and loss account and income and expenses and bank reconciliation statements, everything after going thoroughly, they will give you the final audit report, preparing and presenting the auditor's opinion into it. So if you want, I can explain this in detail, what are the auditor's report is mentioning. Just give me a sec. Yeah, so a formal statement by the auditor expressing their opinion is the audit report. So for this thing only we are maintaining the whole year, right? So that is the essence of the company's prospectivity, the auditor report. If he says that company is malpracticing, or if he says the company is not getting good returns, then nobody will come and take share in your company, right? So that is the reason, it is the essence of your company. So you should pay more attention to this audit report. A formal statement by the auditor expressing their opinion is the audit report. Okay, it is a formal statement, not in like even though it is his opinion after checking thoroughly about your documents, it is a formal statement. He is not giving any random advice to anybody or random type of statement. It is a formal statement. Okay, it is an official report, even it is valid. Okay, and then types of audit reports we have to understand here. So clean or unqualified report. So what they mention in that report, he may say that it is a clean report, or he may say that it is unqualified report, which is true and fair view. Okay, and then qualified report, well, certain reservations. For this, they put some conditions like whatever they have objections, or whatever still the payments are not collected, because even auditors are not too much of theoretical. They won't work on theoretical basis even, because they know the practical problems. So that is the reason they give some reservations, like you have money in circulation. Okay, but you have that in that outstanding list, but still you have not collected due to some practical issues, like in the time of demonetization, or in the time of corona, or in the time of some calamitic issues, they will give you certain reservations. Okay, so sometimes if you have bad debtors a lot, okay, then also they will understand what is the reason behind it. So that is the reason they will give you the qualified report, but under certain reservations. They will give some deadline, and before that you have to collect such things. And then adverse report, statements not true or fair. Okay, this is called adverse report. And then disclaimer, then they say no opinion due to lack of information. If the company is not giving the proper information, they are failed to provide certain documents, or certain proofs of expenses, or certain proofs of assets validation, or certain proofs of loan documents, whatever may be the reason, they won't give their opinion, because they don't want to take risk. If they are stating something, they should abide to that statement afterwards. If the company is malpracticing and if the auditor is supporting them, then he also will be arrested by the government, he will be questioned by the government. That is the reason he doesn't want to take the risk. So then they say in disclaimer that no opinion due to lack of information, right? So that is the reason the company must produce all the information, relevant information required by the accounting rules. And then we'll go to another topic which is very important but easy to understand. These are auditors' duties and responsibilities. As we anyway came across to the auditors' duties, I just want to mention few points here. So auditor duties and responsibilities are examine books of accounts, okay, and then verify assets and liabilities, and then report findings truthfully, and then maintaining independence. Okay, he should not be influenced by any external or internal factors, and then protect shareholders interest. Okay, these are the major auditors duties and responsibilities. So these are the important things I covered. Excuse me. And I just want to mention the vouching here. Vouching is very important, which in practical world now we are unable to see this, but if you join in any CA say industry, or in any other if you are working under CA, you will be knowing in practical even, it is examining the documentary evidence that support entries in the books of accounts. Okay, it is very simple. Even if you go to any shoe showroom, if you buy shoes, you'll get one receipt, right, with the GST details and the price of the shoes and everything you will be getting, right? Likewise, the shopkeeper will be maintaining some vouchers. In the same way it looks. Okay, so valuation, assessing their value according to accounting standards. So these verification and vouching is must in auditing. So verification is checking existence, ownership and possessions of liabilities. It is not on the basis of daily transactions like purchases and sales. The verification is here checking existence, ownership and possession of assets and liabilities of the company. Suppose if you have a company, and as I mentioned earlier, you have a building, okay, and you sold it away, you sold it already 2 months back, but still if you are showing it is in your assets column as it is in possession of your name, then it is a malpractice of or misleading the auditing reports. So you have to, that they will be verified, that they will verify in your reports, because you already sold it and you took the cash, even the name also changed on other party's name. Now it is not in your name, but still you are showing it is in your assets column. So that is a verification they will be doing on this, and they will suggest you saying that you have to change into some other column, not into this assets column, because it is already sold property, right? So accordingly you have to follow. And then valuation, even if you have, as I mentioned, if you have a 2 crore building, but if you are showing it as a 2.1 or 2.2 or 2.5 or 200 crores, then it is also misleading the accounting standards. Okay, so you are not following the accounting standards over there. That is the reason you have to show proper accurate numbers in your document. So finally they also maintain the internal control, internal check and internal audit. The company itself will be doing the internal control, internal check and internal audit. We all know, right, every company maintains some inventory, and there will be a watchman and there will be a clerk who will be noting down all the going stock outwards and what all the stock coming into the go down, everything they will be noting down, right? So that is called internal control. Okay, even if they are paying salaries, that will be recorded. Even if they are spending for the staff entertainment like coffee, tea or even tissues or whatever maybe they are spending for the staff, there will be a record for that each and every pie. Okay, that is called internal control. And even for the stationery, okay, we are, if they are maintaining registers, they are buying some stationery, right? That stationery, pens and the chairs, the furniture, everything will be put into the document. And then internal check. So one guy will be documenting all these expenses and the purchases, and other guy will be checking that type of purchases and sales even, in order to prevent the errors and frauds. Okay, and then internal audit. So after this internal check by their own staff, then internal auditor also will be there. He will do his auditing Okay, this person will be appointed by the same company. And then independent appraisal of operations by internal auditors, they themselves will be auditing in the initial stage, but it is not the final report. They themselves cannot get auditing report. For that reason they have to approach another external auditors. Okay, so this is the main theme of the auditing subject in the BCom. Even if you are joining in any company, or even if you are maintaining your own father's company, you must know the importance of the auditing. So without auditing, without proper scrutinization of reports, your company is not going to get any loans, or you cannot get any GST returns even if you are eligible. So that is the reason you should maintain proper records, and you should get the seal and stamp of the auditor at the every end of financial year. So with the help of auditor support, you can also avoid errors and frauds. Who knows, maybe your own staff is misleading you. Okay, nowadays everybody can establish any company. Education is not required to establish any company. Okay, but what if you don't know to avoid errors or frauds? That is the reason you have to take the support of auditor. And then unintentional mistakes in accounting, errors of omission, commission, errors of principal, etc., all these will be avoided with the support of whether internal auditor or the external auditor. And frauds, intentional misrepresentation for personal gain, this can also be avoided by the auditor's support. So concluding is, auditing ensures accuracy, reliability and transparency in financial reporting. It builds confidence among investors, management and other stakeholders. So that's all for today. I feel this is very important. So please share with your friends if you feel it is useful. Thank you.